This is a special edition of your Money Briefing for Friday, April 21st. I'm J.R. Whalen for The Wall Street Journal. Welcome to the fourth episode of our series, Under Contract, Your Guide to Home Buying. On today's episode, we're talking about common mistakes that can short-circuit the home buying process, or in some cases, result in a disastrous experience.
It can be heartbreaking for a prospective home buyer, particularly for a young family that's buying a home for the first time. You've worked very hard to bring together the financing, to make sure that you have the savings in place as you're approaching that closing date, to get an inspection report back or an appraisal back that doesn't quite fit.
One homeowner we'll meet thought she'd done everything right, but still ended up incredibly dissatisfied.
When I first moved in, I just had this feeling that I didn't like it. I couldn't tell why, but I think later I realized it's because the black mold and the asbestos, even though they've been certified that they're now gone, they're clean, in the back of my head, I still feel like it's still there. So I didn't feel safe.
We'll hear more of her story in a moment. But first, to discuss mistakes and setbacks that can often plague the home buying process is Sam Chandan, founding director of the Chen Institute for Global Real Estate Finance at New York University. Hey, Sam, thank you for being with us.
Delighted to be here.
So, Sam, buyers have been in fierce competition with each other for several years now. What are the biggest mistakes you see and how they make the initial approach to the buying process?
The first thing that we see is that buyers may misjudge where we are in the real estate cycle. And for most households, this is going to be the most significant investment that they'll ever make. And so understanding fully where we are in that real estate cycle, whether or not there's the potential for prices to decline significantly over the course of the coming months, over the coming years, and what importantly may happen with the cost of financing, the mortgage rates, both very, very critical for prospective buyers, particularly first-time buyers, to be thinking about when they're entering that market. But overall, we can reasonably expect this is a long-term investment. And so timing it correctly becomes terribly important, not only when we're thinking about our timing in the real estate market, but also in thinking about where we are in our household's life cycle. It may be the case that a change of job in the next couple of years will require that we relocate to another city. It could be that we're expecting a significant change in terms of the size of our household. It could be that as an early stage household, I'm expecting to start raising kids. It could be as a late stage household that I'm expecting to find myself as an empty nester at some point in a couple of years. But thinking about these two life cycle issues, where are we in the real estate cycle? And what does that mean for prices? What does it mean for borrowing costs, given that this is a long-term investment? But on the other side of it, also thinking about where I am as a household and what my long-term needs are going to be, buying in a way that anticipates those long-term needs.
All right, so let's focus in now on the point where a prospective buyer finds the house they'd like to buy. It's an accomplishment to get to that point, but they probably have competition. So what should buyers keep in mind with regard to the bidding process?
The most important thing for buyers to keep in mind is that they should remain within their budget. This is a long-term financial commitment that they're taking on. Ideally, buyers will have already explored their different options in terms of the availability and cost of financing. And an important part of that includes mortgage pre-approval, fully understanding what kind of mortgage they can carry, but also evaluating when assessing, okay, how much can I bid? It's not just your mortgage payment. There are all sorts of other costs associated with being a homeowner. There are the insurance costs. Up front, there are moving costs. There's the costs of inevitably having to replace a roof or making another significant capital investment in your home.
You mentioned that buying a home is one of the biggest expenses somebody will take on in their lives. Why do you think people are making mistakes at this point?
For most American households, this will be the largest single investment that they ever make. And that really underscores why it is that in this environment in particular, we need to be very, very careful in decisions about where and when we're going to buy a home. For a lot of households, the errors that we see are really being driven by two things. On one hand, it's a high-stakes decision, and it's being made in an environment of considerable pressure. You combine that with a general lack of experience. For the first-time home buyer, this is the first time that they're entering this market. But even for a repeat buyer, this may only be the first time in 10 years or 15 years that they're navigating home buying. So it's not an environment in which we have a tremendous amount of experience. You combine these two things, the high stakes of buying a home, the lack of experience, and what you ultimately see is that homebuyers do a very good job of evaluating the current situation, the current home buying opportunity. How can I make this work? But we very often will ignore the alternatives that are available to us.
When we come back, we're going to shuttle ahead, further along in the home buying timeline to a common trap where prospective buyers often make a critical mistake, the inspection. Stella Guan is in her early 30s, and 2 years ago in 2021, she wanted a fresh start after deciding to sell her condo on the East Coast and move to California. She was one of the millions of people who rushed into the housing market looking for something new.
So I bought a house in a suburb of LA in a town called Santa Clarita, and I had the plan to move to California a few months back. So I thought it'd be nice to get a head start on my home buying process by searching remotely. I got connected to an agent in LA through my previous agent in New Jersey. So I thought it's the perfect opportunity because I have someone locally who can look for me and I could do a video viewing. So I felt confident that this could potentially work out.
Did you actually see the house before buying it?
For the one that I ended up buying, yes. I didn't see a few houses in person and made an offer, but I was rejected on all of them. But the one that I actually ended up buying, I did see it in person.
Now, what did you learn about the house after you moved in?
So I already know that it had a few problems before I made the offer, but I thought they were fixable. So I learned that it has black mold. I also learned that there was asbestos in the attic that I needed to fix, but I thought the price was right and it was within my budget and the competition was very fierce and I desperately wanted the house to settle down. So I thought, okay, it should be fixable. And I got some contractors to quote everything out for me and it seems to be within my budget.
All right, so take us through this timeline. You're given the keys to the house and what unfolded after that?
Yeah, so it really took me by surprise because I had spent about 2 months renovating and repairing the house. I hired a lot of contractors and I spent a lot of money and I was expecting that it would be refreshed and I would be excited to move in. Technically, everything was done. Everything was repaired. So it should be a shiny new house. But when I first moved in, I just had this feeling that I didn't like it. I couldn't tell why. But I think later I realized it's because the black mold and the asbestos, even though they've been certified that they're now gone, they're clean, in the back of my head, I still feel like it's still there. So I didn't feel safe when I was living there for briefly just a few days. And I just feel this is all too much because I was still paying down a lot of the construction costs. And I saw my bank account just getting depleted day by day while I have this concern in the back of my head. So I feel like the combination has really affected my ability to appreciate the house.
So what are the lessons here? How would you do things differently next time?
I think it's really important that if you buy a home, you do not get attached to it emotionally at all. I think I was definitely attached to it because I was really trying to make it work. So I kind of ignored the hard numbers, and not to mention that I actually got a loan that's rather expensive that I need to keep paying down. And it all just kind of crashing down on me is not worth it. So I think next time, removing the emotional element completely and just think of it as a business deal, as any deal that you would do at work, that would make it a lot better.
Stella Guan, thanks for being with us.
Thank you.
And Sam Chandan joins us again. You know, Sam, there's so much riding on the potential purchase of a home, the next chapter of someone's life, more living space if they're planning on expanding their family, and for some, they're caught up in simply the momentum of reaching the finish line. But in falling in love with a home, do people sometimes lose sight of the possibility that they may have to just walk away?
Exactly. It can be heartbreaking for a prospective home buyer, particularly for a young family that's buying a home for the first time. You've worked very hard to bring together the financing, to make sure that you have the savings in place. You've thought about your moving costs. You've thought about, depending on the jurisdiction you're in, the tax costs associated with buying or getting a mortgage. And as you're approaching that closing date, to get an inspection report back or an appraisal back that doesn't quite fit with all of the careful plans that you've made, it can be really tough to have to take a step back and start the process all over again. But it is critically important to get that inspection report done. And when real issues arise that either imply significant upfront costs or significant costs that will be incurred over the lifetime of ownership, that those be evaluated very, very carefully. We don't want folks getting in over their heads.
All right, that's Sam Chandan from the Chen Institute for Global Real Estate Finance at New York University. Sam, thank you very much for being with us.
Thank you so much.
And next week, we'll take a look at an element of the home buying process that often plays a direct role, but is a little more difficult to control: the psychology of buying a home.
Well, one of the things that happens in just about every area of investing or purchasing decisions is something that we call FOMO, which is fear of missing out. This is hardwired into our brains. Interest rates are going up. I'm starting to get anxious. Should I buy now? Because when we become emotionally charged, we become rationally challenged. And the more emotionally charged we are, the more likely we are to make a mistake.
And that's it for your Money Briefing this week. Our producer is Mohsen Ali. This episode was mixed by Jess Fenton. Our supervising producer is Melanie Roy, and our executive producer is Chris Zinsley. I'm your host, J.R. Whalen. Thanks for listening, and have a great weekend.